there is a synergy I was reading between real estate investments and franchises, and how savvy investors utilize it to their advantage. Can you maybe just expand on that a little bit?
I mean, I've got real estate investments. I'd say 75% of my clients have real estate investments. There are a couple of really, I think that common trait, as you talk so eloquently about oftentimes, is, a semi-absentee or semi-passive executive model type. That's very common in franchising. Of course, that's what you're doing in real estate. Oftentimes you're not out there necessarily, doing the maintenance yourself, but instead you're quarterbacking it. So very, very similar. And in some cases, real estate clients of mine, whether or not they operate in the real estate field full time, and we do work with a lot of brokers and mortgage bankers, but those that have invested in real estate, they either say, hey, I'm looking to diversify my current portfolio and create more semi-passive revenue streams, or maybe complement it. I work with some that have several dozen rental homes or rental units, and they say, I'm paying a service provider today, why not just pay, in it's businesses. I kind of joke that non-sexy is the new sexy when it comes to industries, especially coming out of COVID. People want things that are COVID resistant, Amazon resistant, in some cases, recession resistant. Things like ServPro, water mitigation, mold remediation, or roll-off dumpsters, or we've done 3 gutters deals recently. Just a great business, fragmented market, $6 billion industry. We just had a Wall Street attorney outside of Boston buy into a gutter business. No background in that space. $52 billion insulation market. We've been doing a lot of deals in insulation. I'm an investor in a driveway company. We don't even have to market it. There's such customer demands. These types of businesses oftentimes work really well for real estate, but also if you're a commercial real estate guy, we've got a great, parking lot maintenance program. It does the line strapping, it fills potholes and resurfaces. I mean, things that you don't think about till you need to. Things like oil changes. We just did a 10-unit oil change deal where they use, prefabricated buildings in unused parking spaces of a retail shopping center, backed by an investor group. You're able to get in for $125, $150, all in investment, including working capital, and then you're kicking out, $330 revenue per location, about 30% bottom line. And so you get a couple of these going, it creates a great semi-passive type revenue stream.
So as far as ROI on that, I mean, what type of returns are you, generally are you looking at per year net?
Yeah. And I speak in terms of net EBITDA after all expenses paid, cost of goods sold, operating expenses. So in the case of the oil change one I just mentioned, you're dropping 130 to the bottom line per year. You paid about 140, 150 to get in. So you extrapolate that. I mean, you're close to doubling your money. And then of course you're going to be able to sell it down the road. So you're building, business kind of exit value. The gutter business that I just mentioned that we've done 3 deals with recently, this one's been on fire, and it's because the financial model behind it, all in investment, you're probably 175, 200-ish, including, vehicle, working capital, franchise fee, so you're up and running. In that business, they're averaging 1.7 million per location. And that's the great thing about franchising. You're not just using pro forma on the back of a napkin. This is the average. Franchising is regulated by the Federal Trade Commission. You got to cross your T's, dot your I's in that franchise disclosure document. But across all their locations, 1.7 million average with about a 30% bottom line. So that's not a 30% return. That's dropping, call it 550,000 or so to the bottom line. Now that's if you're running the business. If you were paying an operator run the business, you're probably paying them, call it 100,000 or so, but that's still dropping 400, 450 to the bottom line on a business that you paid 200 for, and you're going to be able to sell it down the road. So it's eye-opening to people once they realize some of the riches in the niches.
And so when you think about, the pros and the cons of franchising versus starting a company from scratch, touch on that a little bit.
Yeah, and I'd start out by saying franchising is not right for everyone. I have clients, I'm a member of the Entrepreneurs Organization. Some of those clients are too entrepreneurial and they want to put their thumbprints all over it and don't want to stay within the lines. However, for so many, and I'd say the majority, even existing business owners, they say, hey, I love the idea of starting on third base instead of first base because I'm not testing product market fit day one. Instead, I know the path to profitability. I've got a playbook. And now it's just about executing that playbook. You've got a coach on the sidelines in that franchisor. The better you do, the better they do. So, they're supporting you along the way. You've got franchisees in other markets that are living the same thing day in, day out. You're in business for yourself, but you're not by yourself because you're constantly exchanging best practices and learnings around marketing vehicles or best places to hire talent, items like that. And then you're also building an asset that's going to have exit value, as I mentioned. And Daniel, a really interesting study came out recently by the Riker School of Business. They looked at 2,000 businesses, franchised and non-franchised in like-kind industries, and compared their exits, about 2,000 businesses over a 10-year period. And they found that those that were franchised traded at a multiple upon their exit at about 1.5 times non-franchise. And so there's value on that resale piece down at the end of the line as well. And I mean, from a success rate standpoint, we all know startups, 5 years down the road, less than 10% are still in business, whereas on average, a little over 90% of franchises are still in business. So doesn't totally de-risk it, but it certainly does mitigate the risk a good bit.
Absolutely. Absolutely. And as far like, how much work do I got to put in, man? I mean, I'm all about, me, I'm all about passive income, man. I want passive income. I want cash flow. I want money. I want, mailbox money. So what, how much, I mean, legitimately, like no bullshit, right? Like how much work do I got to put in here?
I always tell people if they think it's going to take 10 hours a week, it's probably going to take 15, 15, it'll probably take 20. It's going to take a little bit more than whatever you think it is going in. That's just life. But it comes down to getting a good general manager that you can put in place day one that's going to run those operations. I've got a client of mine, Nathan Bocock, who, great guy, 39 years old. He's become the largest franchisee of 2 Men and a Truck moving service, operates in 10 markets, $30 million plus annual business. And he and I've done a couple of deals together the past few years where, I mean, he's a busy guy, but he keeps picking up more businesses in the franchise realm, and he'll put a young general manager in place. In his case, he actually provides them with some equity and incentivizes them. And I mean, he's just had a great track record of not having to put much time into these businesses. He'll get on a couple of coaching calls every week or two, but that's it. And so I've now got him coaching my clients. So once I have a client move forward with an opportunity, before they launch, I set them up with Nathan for a couple of coaching calls, and he shares best practices on where do you find the general manager, how do you set them up for success. I mean, it's something that I've seen across the board with clients. I've done it myself. I mean, we've got a 27-year-old running that driveway business that I mentioned. We recently acquired 2 other franchise locations, and I mean, he's off to the races. His background, he was a CPA, 5 years in a Big 4 accounting firm. He said, I'm ready to break out of these 4 walls and go build something. And we actually let him buy into a little bit of equity. So he has some skin in the game, and Daniel, he's killing it, absolutely killing it. And it's just fun. And so our level of involvement right now, just firsthand, we'll get on a weekly call. We'll get together for beers once a month, my partners and our GM and myself. And then we do text a good bit, throughout the week, but it's more at the strategic level or him sharing updates with us. We recently sponsored a NASCAR, which was a lot of fun. Never had done that before, and had it wrapped with the driveway business. And so we're just having a good time, and the thing is growing and profitable, and it's off to the races.
That's fun. That's fun.
Yeah.
It's exciting to look. I don't care what business you're in. I mean, it's exciting to see people winning. It's exciting to see people have success and having fun. I mean, what's the point if we can't have a little bit of fun, if we can't enjoy ourselves? And come on, I mean, a couple of text messages throughout the week, a couple of calls during the week. I mean, that doesn't seem very crazy or taxing to me. So talk about the failures, man. I mean, there's got to be some downfall to this stuff, or there's got to be some failures, even for, I mean, just you personally. I mean, tell me about some of the bad things that have happened in the past.
No, definitely. From a client standpoint, I've only had one client where it hasn't worked out, where they've thrown in the towel. I mean, it's just, we've been very fortunate. We've had a great success record here. And in most cases, clients come back and buy additional locations or additional businesses. But no, we did have one guy, he lived outside of Nashville, about 3 hours outside, and he bought a mosquito business in Nashville. And this was one that, it was a great system. It was a business that, I think out of the ground, if you could get some grassroots efforts, friends and family putting up yard signs or just making some referrals, some test trials out of the gate, that it's a business that would be benefited by that. And so about 3 or 4 months in, he lived 3 hours outside the market, didn't have contacts in the market. He said, this is going to be a little too much effort for me. I'm not sure it's going to get to where I want it to be, at least not fast enough. And so he threw in the towel and, left on good terms. So that was my kind of one, that didn't work out. On the personal side, we've had a good record. There is one that I've taken a lot of learnings from, and that was a partnership setup where I had two partners. And as you know, partnerships are great till they're not. And, in this case, the guy, I was long-term friends with one of the guys. We brought in another guy as our operating partner. We let him essentially have a third of the business, buy into a third. And he was not the right fit. And we didn't realize that until a little bit late. And he had been giving us reports that, hey, the business is growing, it's doing great on the revenue side, but he hadn't been managing expenses or managing our marketing cost. And so once we kind of pulled back the coverage, we said, wait a minute, we don't, you've lost our trust. We can't have you running the business going forward. So we had to get him out. At the same time, my other partner became the operating partner, but that's not what he signed up for in the beginning. And so to incentivize him, I had to sell my equity to him at a little bit of a loss. But lots of learnings. Of course, there's drama around that. And, it doesn't sound that terrible now, but, when you're living in the moment, it's not fun. And fortunately, I've been able to draw some lessons from the setup that we had and lack of contingency planning that now we've put into agreements that I've done or my clients have done.
Thank you for watching our short clips on Alonzo Academy. If you'd like to watch the next short clip, click here. If you'd like to watch the entire podcast, click here.